Hello, everybody. Welcome back to another episode of Talking Money. I am your host, Joe Matea, and this is brought to you by Herein Wealth Advisors. In today's segment, I want to take a few minutes and chat with you about risk. You can see here behind me the history of the S&P 500 all the way back to the year 2000. But the risk that I want to talk about is not specifically about the market. It is more so about income in retirement. I'm talking about sequence of returns risk. This is a risk that is seldom addressed or even discussed or even known about in retirement. Sequence of returns risk is simply the risk of pulling money out of our portfolio or an investment account when the market is down. I'm thinking about the tech bubble bursting or the dot-com bursting in the year 2000 to 2003, 2004. I'm talking about 2008 and the financial crisis. I'm talking about COVID. I'm talking about 2022. Those periods of time were negative for our markets and accounts were likely down. Think about your own portfolio. How down were you during those periods of time? And were you pulling money out regardless of what that performance was? Quick story, my Nana retired right in 1999 before the tech bubble burst. And in retirement, like most of us, she was pulling money out of her accounts regardless of what that performance was. Unfortunately for her, that did some damage that she could not dig out of. What I'm referring to is simply investing 101. When do we buy low and when do we sell high? Thinking about the S&P, when should we be buying, putting money into the market? The tech bubble, 2008, COVID, a perfect world 2022. That's when we're putting money in. So this risk is really the risk of selling at a low point to get cash out of our portfolio. And in doing that, we're selling low and taking those losses or realizing them. So how do we avoid that risk? There's a number of ways, but what I really want to drive home here is making sure that our portfolio is in a position so that when the markets are good, we can go to a bucket of money in the market and pull that money out. And when the markets are bad, we have somewhere else that we can go to pull the income or pull the money out to produce the income that we need to sustain ourselves for a period of time. If you're curious to know how your portfolio is positioned to weather the ups and downs that are inevitable in the markets, give us a call. The number to do that and have a conversation about that is 866-766-8332. I'm Joe Matea. This has been another episode of Talking Money brought to you by Rooted Wealth Advisors. We'll see you on the next one.